Hey guys, with this video, I wanted to take a few minutes just to discuss the significant advantages one would have over your typical retail trader when they use historical price action and then marry that historical price action with current price action. Okay, so let's jump right in so I can share with you exactly what I mean. So this system that I developed, it's really an indicator, is called Price Action Harvester. It's built exclusively, I wrote it exclusively for NinjaTrader 8, and it runs off of NinjaTrader's Market Analyzer, as you see here. So I've already loaded the template, but let me show you where I got that template. So I have all these templates that I've prepared that come with Price Action Harvester, the add-on indicator. And so today is Tuesday. The trading day is almost over. It's 12:34 right now. So let's assume we're getting ready for tomorrow's trading day, Wednesday's trading day. Then I'm going to load, since I'm in Pacific Standard Time, I'm in Los Angeles. You're in my guest house right now. So I'm going to go ahead and load the Price Action Harvester Wednesday template. Essentially what it does is it breaks it down by the hour for most of the day, and towards the end of the day, the last 30 minutes of trading, RTH, regular trading hours, you have 20 minutes, 12:30, 12:50, and then from you also have 12:50 to 1 o'clock. Okay, so it's military time, 1300 hours. So what I'm going to do is I've already prepared some instruments. Okay, so if I wanted to load my instruments, I'm just going to go to Add Instruments, and for instruments to analyze, these are all essentially stocks. So I'm going to go ahead and load that on one side. And as it's loading, I'm going to open up another tab. And on this one, I'm going to do that whole process again. And I'm just going to load. It goes a little bit slowly because it's doing a bunch of number crunching in the background for, I believe I have 47 stocks listed on that list that I just loaded. So you're going to see it sort of crunch through that data. And then I'm going to go ahead and load it for futures as well. So let's assume you were trading or potentially looking for trades for stocks and futures. So I just loaded that Wednesday template again. I'm going to go ahead and add the instruments, but this time I'm going to use the same futures list that comes natively with NinjaTrader 8. Okay, so they have a bunch of futures instruments. Obviously, you can add an instrument if you so chose. That would be fine too, but let's just, for the purposes of this demonstration, load that. So as it's crunching through these numbers and those numbers for the stocks, it's going to be a little bit slow in the beginning. It is a lot of crunching that it's doing because what I've loaded here is a 30 look back template. Okay, so what that means is it's looking back 30 weeks. So today is Tuesday, but I've loaded the Wednesdays template. So it's going back 30 Wednesdays to see what happened every hour to price, historically speaking. And then you can determine what the best quote unquote days were to trade and the best times. So if price moved against you, if you find that price not moved against you, but price fell or went south, price decreased, then that's not necessarily an opportunity to short. It's also a potential opportunity to buy at a lower price, right? So you as a trader can make that determination. So going back to the screen here, I have everything from Apple down to Zillow loaded. Okay, so all of those are there. And you can see very clearly that everything is loaded here just at the time. Now I have other templates that'll break down other parameters here, other metrics, where, for example, you can find out what the average price move was when price increased, what the average price move was when price decreased. You can find the mean, the total, the increase and decrease mean, and you can also get the standard deviation. So you can know, for example, if it's 3 standard deviations away from the mean from this time to this time on this day, then you would know that's most likely the highest price it's going to go to, okay, as far as the range goes. Okay, so it becomes more clear as I demonstrated, but it is very interesting. Now I should note that on the retail side, almost nobody uses historical price action, okay, which is sad, because on the commercial side, the hedge funds, almost nobody trades without it. Okay, so that's something to remember, guys. If they're trading, the industry spends about $39 billion a year on data. They're not doing that for fun. They're doing that because they want to get that data and use it to their advantage. Every piece of information that you have can be used to formulate some sort of an edge. Okay, when you marry historical price action with current price action, the results tend to be better. Okay, so what I've loaded here is for Wednesday hourly, and if I did this, for example, it's going to load the highest one we had between 6:30 and 7:30. What that 70 means here is that 70% of the time, price for Tesla increased between 6:30 and 7:30 on Wednesdays. That's good insight to have. Okay. Now, let's say you wanted to go fast forward another hour. If we were to look at the next one, let's say 73. So Bank of America, BAC, on Wednesdays between 7:30 and 8:30, again at Pacific Standard Time, price increased 73.33% of the time. It's good information to have. And this is the case for all of it. And the same is true, for example, for the futures. Okay. So if we basically look at the futures tab, you're going to see what happened to price on Wednesdays during these time intervals. So if you wanted to find, for example, oil on Wednesdays between 6:30 and 7:30 increased, price moved higher 66.67% of the time. That's good information to have. And so in essence, this is how easy it is to be able to get different prices and find out historically how price reacted. Okay, you can edit on it, all of these columns. So if you don't want to look back 30 weeks, let's say you wanted to look back 52 weeks, that's a whole year. You just change that 30 to 52. Okay. If you wanted to look at different time frames, you didn't want to look at an hour, you wanted to look at it by 30 minutes, you change that from 7:30 to 7, and you would do that for the rest of the plots, and you would be able to get the best times there, quote unquote. So this is an important advantage. Again, retail traders, that includes prop traders, for the most part are ignoring this awesome data that's available to all traders. Okay, yet on the professional side, almost nobody's ignoring this data. All right, there is, one of the top guys that I respect in the, he's the father of algorithmic trading, Jim Simmons from Renaissance Funds. This is a quote that I have on the website. I mean, it's from Jim. We search through historical data looking for anomalous patterns that we would not expect to occur at random. Okay. The reason is saying that, I mean, he's being as clear as he can be here, without telling you how how his recipe works. All right. But he's telling you this is what we're doing. We're relying on historical data. Of course, he's not going to strictly rely on historical data. He's probably going to be a lot more sophisticated than just that. He's going to rely on current price action as well. And there's nothing wrong with looking price. You have to look at current price action, right? It's not just what happened historically. But when you marry those two, you get an edge. It's that simple. So if you don't have that information and the people that you're trading against do, you are essentially not, you don't have the right amount of tools and that you need that are necessary to compete in that field. And that's why the statistics are so bad when it comes to retail traders, unfortunately. My heart is for retail traders. I want them to do really, really well. But ultimately, they statistically haven't. So a big chunk quit in the first month of trading when they first start. And then after 2 years of trading, over 90% of traders quit because they've lost money. All right. There's a story that my CPA chairman knew when I was trading actively. I was sitting in his office and, he says, Rafi, there's a guy here that's trading size. He's a retail trader and he's pretty impressive. $112 million in gross income. What I heard was 112 million. I didn't hear that gross part. Okay, very clear. So I was like, 112 million, that's fantastic. In 1 year, that's great. He goes, hold up. You didn't ask me what his net was. I go, so what was his net? Meaning after his taxes. And he goes, $12,863. Okay, that's a lot of coming and going, guys, that this poor guy really has gone through to make $12,863 after taxes. That's a lot of work for such a little pay. I mean, people that are working at, I'd hate to say it, but In-N-Out and other fast food places are making more, significantly more. Okay, so it's sad to put that much energy into it. And he was trading manually, and for the most part, I believe he was trading Forex. But at the end of the day, that's all he made, or I should say, at the end of the year, that's all he made. So, that's another thing that retail tends to do. For the most part, retail, including prop traders, they've been told to trade themselves, not to rely on automated trading systems, when in fact they should be, in my opinion, relying on automated trading systems, even if they are the most disciplined traders. And I know traders that were trading on the floor before it was electronic trading, and to this day they're trading. Okay, even they will testify that there are days where they just mess up. They're on tilt. I mean, if you have, you get into an argument, for example, with your significant other. I mean, that's going to impact your decisions. If it's raining, you look up and you go, oh my goodness, there's a leak. Okay, that's going to impact. How much is this going to cost me? Like, that's going to impact your decision that day. All right. You get a big bill, in the mail. You look at your credit card. Wow, look at my credit card. I've charged this much. Between myself and my better half, we've charged this much on this credit card bill. My goodness, you look at that. That's going to throw you off. Okay, so you get on tilt and you make bad decisions. All right, you could have 6, 7 winning trades. On the 8th one, blow it all, and then some. Okay. You know what else? There's another thing that happens to a lot of manual traders where their stop gets taken out and price moves in the direction they thought it was going to go to. Okay? And they start blaming everything. All right? They start blaming, why does God not love me? What is they're after my money? What is it? And none of those things are the case, of course, right? You probably put a stop in a place where it was obvious for the algos that you would put it. Maybe it was a little below a support line or a little bit below Fib 68 or wherever it is that you put the stop. They figured it out. They knew you would put the stop there. That's pretty obvious. Prices moved above that price. You have the stop at a support level or near a support level. They're going to figure out that if they see a bunch of stops, you can see if they have $2 billion that they're managing, $500 million moves the price down. Other day traders jump in and they also short the instrument. Next thing you know, it hits that level, and now they buy $1.5 billion and get to enter at a much better price. And so this is quite common in the algo world. This is how they play the game. It's not that they're after your stop per se or anybody's stop. It's just they see stops there and they take advantage of it. And so that's because those are manual traders that are essentially following rules, right? If you watched it on a YouTube video, just know that algo developers on the pro side, algo developers like me, except teams and teams of them and committees that are watching over those teams, are looking at those YouTube videos and seeing how they can manipulate that. I mean, if you have a teenager who's showing you a YouTube video, okay, and he's saying, this is what I use, and it's impressive because he didn't show you his stops. It's impressive because he only showed you 30 or 60 days. It's impressive because he's trading Forex but not providing you the commissions data, okay, which can ruin a trade. Commissions on Forex are very high. And so all those things are being ignored, and it looks very good. I get emails once in a while. I've gotten 3 in the last 4 months where people have said, Rafi, I know that you do programming. Look, I watched these YouTube videos. Can you watch these YouTube videos and make a strategy that combines the 4 different strategies that these 4 different YouTube videos are showing and give me that strategy and I'll pay you for it? Guys, I look at the strategy. It's basic indicators that somebody basically called some other name, okay? And, they said, hey, let's see if we can market this to these retail guys. That stuff, if they're doing it and they're putting it on a YouTube video, and it doesn't involve statistics and historical price action, whatever system that they're using, ultimately is like a coin toss, okay? You may win, you may lose. It's about 50-50, okay? It may actually be a little bit less than 50-50 against your favor. So it's not a good bet to make, in my opinion. In my opinion, that's not investable, okay? If you're going to invest in a strategy, number one, it has to have some reliance on historical price action. So meaning you've taken day and time into consideration, okay? 1, 2, in my opinion, it should be fully automated. Now, again, I'm not talking about investing. I'm talking about day trading, okay? If you're doing day trading, that means your mindset is, I'm going to be aggressive with my excess capital and I want to make money today, okay? That's my hope, that I make money today. That's my goal. That's my objective. I may lose money. I may make money. But my objective is to make money today. And I understand that I'm going to lose money, but I'm also hoping that I make more money than I lose. So when I look at it at the end of the quarter or better yet, at the end of the year, I'm up significantly over just investing in a particular stock or a group of stocks or an ETF or anything like that. So that's the whole point. And if you're being aggressive like that, then and not using automation, just the human emotions that come into play, just that. Even if you're the most dedicated, you wake up at the same time every day, you pray, you meditate, you eat the right breakfast, you take your vitamins. There is a process, a methodology as to how you trade. You turn on CNBC and Bloomberg and you read your tweets, and all that is an hour and a half before the market's even open, and you're ready, you've got everything set up properly, and then something happens that could throw you off. I mean, a simple bad trade, and you meant to go long, you pressed the wrong button, you went short. I mean, a simple thing like that can throw off the rest of your day, potentially the rest of your week. Okay, so when it comes to trading manually, I'm against it. Personally, I would never do it. If a loved one were to ask me, Raf, is it okay if I trade manual? I would say no. I would say it's not okay. I think you should invest in either building your own strategy that's completely automated, or invest in an available strategy that's unique, that you can take advantage of. And that strategy better incorporate historical price action, because if it doesn't, you're losing half the battle before you ever enter this war. Okay, so it's not a good strategy. Now, if you were to invest, that's completely different. I think if you're investing, and forgive me for the guys who may be watching this that are, I guess, other developers like myself that are working for various funds, I don't think you should be trading algorithmically if you're investing. Meaning that you're either swing trading, or you're holding for a few months, or you're like, this is my next 10-year investment. Okay, I'm looking for a 10 years. I'll take a look at it once in a while when I'm on a break or I'm in the restroom or something. I'll check my phone to see how it's doing. But other than that, I have, not really, I'm not concerned. This is excess capital, and I'm investing in this company that I believe in, or this cryptocurrency that I believe in, whatever it is that you've chosen. Okay, that's different. I would never use a robo-advisor for something like that. In fact, if you're not comfortable doing it yourself, I would recommend in that situation to go to an experienced financial advisor. Now, I'm a commodity trading advisor, not a financial advisor. I am a commodity trading advisor in that, that's what I do. I'm a registered commodity trading advisor. But for stocks, for example, I can't handle that. You'd have to go to a financial advisor. In fact, as a commodity trading advisor, I'm not taking on any clients either. So I'm solely dedicated myself to developing my trading systems and taking on clients that are looking for bigger projects. So that's essentially what I would say. I'd say go to a financial advisor that has, if you're looking to invest in stocks, that has experience doing this, that understands how, during what seasons to rotate in and out of different positions, and they have a nice long track record, a history of performing well for their clients, and let them handle it. Why not pay them a little bit something to help you, make better choices. If you think you can do it yourself, great. If you have a great, understanding of how this works, how investing works, great. But when it comes to day trading, then it's a very different mentality, right? Day trading is an aggressive. I'm in, I'm out, I'm hoping to generate money. My objective is to generate income today, not tomorrow, not next week, today. And so that's very different. When it comes to being aggressive, a 1 minute tardiness, okay, if you're late 1 minute on entry can make a world of difference. If you exit 2 minutes too early, it can make a world of difference. And you can exit just because you saw price move against you a little bit, you got nervous, you exited. When price kept going higher and higher in the last 2 minutes, you would have made double the money potentially. I'm obviously hypothetically speaking, than you would have made if you would just exited, but you exited, it's too late now. Okay? The system wouldn't make that mistake. The system's been pre-programmed, it's gonna go. Obviously there are issues on the system side too, but that's gonna make this video a little bit longer. Those issues, however, are far, far less than the negatives or issues that go along with trading manually. So if you guys want a more detailed demonstration about how Price Action Harvester works, or how Price Action Harvester Automated, which is the automated version, which actually trades for you, works, let me know. I can arrange a private one-on-one demonstration via Zoom to explain to you how this works, to answer any questions you may have. That's it. Sorry if it was a very long video, but I hope it was helpful. Thank you and God bless.